On Tuesday, good afternoon, I'm Achim because you're watching World Talks. On Tuesday, the European Commission greenlit the SAFE mechanism, which is designed to facilitate the member states to borrow money for military equipment. Poland plans to secure some 30 billion euros from the mechanism's 150 billion budget. Warsaw's latest economic statistics show that the country is doing well. It has the highest growth rate within the bloc, and it seems that further EU investments can only help the situation. And to talk about it, we're joined by Professor Christopher Hartwell, Director of the International Management Institute. Good afternoon.
Thanks for having me.
Thank you for accepting our invitation. So first of all, I'd like to start with, well, war money. How can the 30 billion euro cash inflow on military purchases help the Polish economy? And can it help the Polish economy?
Well, any influx of money is a windfall gain, right? And especially given the fact that the Polish government budget right now is running hot in the sense it has more expenditures than it has more revenue coming in, and this is built into the budget. Despite some talk that this is supposed to be a responsible budget, it really isn't. So anything that can kind of paper over current expenditures right now can definitely help, especially when it comes to building up the secondary industries that are necessary for increasing defense spending, which is where I think a lot of this is really going to be oriented. If it's not specifically on defense, it's going to be kind of on affiliated logistics, transport, and so forth. But other than that, any amount of money coming in is always a good thing. Any economist will tell you that.
Sure. I can tell you that. Well, now, as we said in the very beginning, Poland is doing quite well according to indexes. Now, from a global perspective, how would you compare Poland's performance to other mid-sized economies, especially of the Central and Eastern European region facing similar pressures from the US, China, trade tensions, and to supply chain disruptions and defense spending shifts?
Yeah, Poland continues to amaze. It's been, it was the only country in the world that grew, or the only country in Europe that grew during the global financial crisis. It's its first contraction, kind of, a self-inflicted wound, if you will, during the COVID pandemic. And it's returned right back to trend growth since then. It's the only country in the CEE region, Central and Eastern Europe, that hasn't disappointed, especially in kind of its 2024. It's weathered the storm of uncertainty. You mentioned kind of US-China trade war, US trade policy in particular, the ongoing Ukraine war. Poland has continued to kind of buck the trend. And it's a testament to the reforms that were put in place at the beginning of transformation, obviously 1989, 1990, but also as to what's still in place since EU accession in 2004 and kind of getting the institutions, getting the fundamentals right.
Mm-hmm. And yet it's easy to go from green to red. So looking ahead, what should Poland prioritize in the second half of 2025 to maintain this economic momentum?
Well, a lot of this has been driven by consumption. And I mean, we see that kind of pretty much everywhere in Europe. Poland has always been a laggard in terms of investment. There's been higher levels of public investment. Private investment continues to be low. It's always a laggard in the European Union. I believe it's, maybe second to the bottom in terms of private investment as a percentage of GDP. This is what needs to turn around, and this is what is going to create sustainability within the Polish economy. Because of that, there needs to be kind of forward-looking progressive policies in terms of business.
But Professor, how to explain this lack of interest from foreign, I guess, investors to allocate their money in Poland?
Well, it's not only foreign investors; it's Polish investors as well. I mean, a lot of it has to do with kind of Polish diaspora, leaving the country in the 1990s, the 2000s, settling in the UK, settling in the US. But there just isn't this continuous push domestically. I mean, Poland has done a very good job in terms of attracting foreign investors in high tech and especially in automotive sectors. It's moving kind of up the value chain ladder. And a lot of it has to do with kind of the basics of the business environment, tax administration. Tax policy is still not necessarily growth enhancing. There needs to be the simplification of how to start a business. of how to file your taxes, of how to register. All of these things are easy wins, right? These are things that other countries have done and that they could quickly kind of move through, that could attract not only foreign investment, but also domestic investment.
Now, given the war in Ukraine and Poland's role as a logistical and humanitarian hub, do you see the conflict as a net economic burden or opportunity for sectors like infrastructure, energy, and defense?
Well, obviously, everyone in the world would be better off if this conflict weren't happening, if Russia didn't have this all-out invasion of Ukraine. The Keynesian economists like to talk about kind of the stimulus effect that would come from a war, from the destruction and kind of the reconstruction. Poland, in some sense, has benefited from it. The influx of Ukrainian refugees have augmented kind of the Polish labor market unbelievably. It's helped in terms of being a logistical hub, as you mentioned. But the watchword is uncertainty, and that is the weight that is dragging down the world in 2025, whether it's U.S.-China, whether it's U.S. trade policy, whether it's the continued war in Ukraine, and what happens next. And that uncertainty is another key factor which is holding back investment, because Poland is ensconced safely in the EU. It's had great growth prospects. Right now, it's basically the frontier of the EU facing an invasion on its borders. And that uncertainty is going to continue to kind of stifle investment, except for perhaps the most savvy investors.
Now, there's an ongoing debate in Brussels about the next EU's multi-annual budget. Cohesion funds, the ones that Central and Eastern European countries build roads and schools with, are primed to be slashed. By how much do you reckon?
I have no kind of number to say how it's going to be slashed, except for the fact that we've been talking about this for years.
But given the EU's determination to help Ukraine, right, and to rebuild the military potential of Europe.
No, this is true. I mean, there are a million competing priorities here. They're still going whole hog on kind of Green New Deal type things. In reality, and right now, there's so many different proposals floating around, right? Van der Leyen says we're going to have perhaps combine the common agricultural policy and cohesion funding. I think there's a lot that's up in the air right now in terms of kind of the slashing of the cohesion funding. Yes, there's probably going to be some reprogramming of it. I don't think it's going to be, it's not going to be catastrophic. But again, this is something we've been talking about for 10 years. Poland had 246 billion euros from 2004 to 2023, about 12.5 billion euros a year. It was lumpier, but that is something that you get accustomed to. But we all knew that this was going to end at some point. It should not be a surprise in terms of weaning ourselves away in the Polish budget from this. Besides, most of the infrastructure has already been built, as you can see on the screen. So where it kind of goes from here, this is where the private sector and foreign investment needs to pick up the slack.
Lastly, Professor, and briefly, can Poland maintain over 3% growth rate once cohesion funding, as we have already stated, will be lower, significantly lower?
Yes, but I think the fiscal policy house in Poland needs to get in order. There needs to be some rationalization of the spending that's been done. The fact that there's such a large budget deficit now, it's going to be larger once the cohesion fund goes. So there needs to be a better prioritization of what can help Poland sustain its growth. But I think I can do it. I'm definitely optimistic on Poland's future.
Professor Christopher Hartwell, Director of the International Management Institute, was our guest this afternoon. Thank you very much, Professor.
Thank you.
And thank you for watching, and stay with us for much more here on TVP World.